A very good evening to you all, friends. I'm Sanjeev Singhal, Central Council member and Chairman of the Auditing and Assurance Standard Board, Chairman Public Relation Committee, and Vice Chairman Sustainability Reporting Standard Board. On my behalf, on behalf of the board, AASP, and the Vice Chairman CA Vishal Doshi ji, I welcome you all to the 125th program of AASP for this council year. Friends, it's been our endeavor to update our member on various topics pertaining to audit. Audit is the backbone of our profession. And today's topic is auditors' communication with those charged with governance. Friends, how the auditor communicates with those charged with governance, means the management of the company, is very important. Recently, NFRA has also given its observation in some of the cases as to how an auditor should communicate with the management. It should be minutized, how many meetings have happened, what kind of presentations have happened, what kind of documents have been given, etc. And I'm thankful to Bhiwani branch. Bhiwani is almost my native town. I belong to Rohtak. So I have so many friends in Bhiwani. I'm thankful to Bhiwani branch chairman and the treasurer for having agreed to co-host this program with us. And our learned speaker for the day is CA Pushkar ji. Thank you, Pushkar ji. So may I now request our worthy chairman Dinesh Chauhan ji to give his opening remarks and also, welcome today's speaker. Over to you, Dinesh ji.
Thank you, sir. Our today's speaker is CA Pushkar Sankhalkar ji, and I give the brief intro of our today's speaker. Pushkar is a chartered accountant, has also completed his Master in Commerce from Mumbai University. He is currently working as a director in the assurance practice of SRBC and Company LLP. He has 15 plus years of experience in the field of auditing and financial reporting and advisory matter. He had led audit of several large companies, including companies engaged in the metal and mining, industrial product, media and logistics sector. Pushkar also has significant experience of managing capital market transaction, including bond offering on overseas stock market. He has gained significant exposure by working in offices and assignment in USA, Kuwait, and Switzerland. Now I request to Pushkar ji for start of today's webinar.
Hi everyone. First of all, thank you to Sanjeev sir and thank you to Dinesh ji for that wonderful introduction. And thank you ASP for giving me this opportunity to speak on this very important topic. I hope I'm audible to everyone. So let me just share my screen.
Yeah, you're audible.
I've just made a small presentation, so I'll just share my screen to all to the same. I hope the presentation.
Yeah, it is visible. Please go ahead.
Yes.
So like Sanjeev sir said, this is a very important topic and the regulators have been focusing on this for the past few months and for a few years. So I will quickly, discuss about the overall scope of this auditing standard. So 260 is the standard, SA 260 which deals with communicating with those charged with governance. And 265 talks about significant deficiencies which are required to be communicated to those charged with governance. So first starting with the overall scope of 260 is it's applicable to audit of all entities irrespective of the size, whether listed, private, closely held. It's applicable to all entities. It's applicable to audit of financial statements, but it can also be used for any audit of historical information where those charged with governance are concerned, or for maybe a special purpose audit. So it can be adapted to all kinds of audit and not just the audit of statutory audit of the financial statement. Third important aspect to note is that, just because the standard says that the auditor needs to communicate with those charged with governance, it does not relieve the management of their responsibilities of communicating. So, irrespective of whether auditor communicates or not, the management responsibility of communicating with those charged with governance still remains. Similarly, if management has communicated certain matters to those charged with governance, it does not, imply that the auditor need not communicate those matters. So the standard is quite clear. It says that irrespective of management communication or not, auditor is required to do this minimum communication. The form of the communication may depend on whether management has already communicated the matter to those charged with governance. However, the auditor is still required to communicate. Coming to the objective of SA 260 is to communicate what are the auditor's responsibilities in relation to the audit of financial statements. So this standard helps the auditor communicate to those charged with governance its responsibilities in relation to the audit. It also helps the auditor, it gives a chance to the auditor to kind of communicate its audit plan, the scope and timing of the procedures the auditor expects to perform. This to those charged with governance and take their concurrence on the overall procedures. Similarly, it helps the auditor get information from those charged with governance on what is their perspective on the overall audit, whether any areas they need to focus on, any specific items the auditor should take care of. So that also is covered in the scope. It helps auditor provide observations to the entity on a timely basis. So generally, our observations are in the form of audit report, a modification to the audit report, but this standard helps give a chance to the auditor to communicate early in the process of the audit any deficiencies or any observations that the auditor has. And this also helps in promoting two-way communication. So it's not just the standard clearly specifies, it's not just the auditor communicating with those charged with governance, but it's vice versa also, wherein those charged with governance are also responsible to responding to the auditor. SA 265 basically, it talks about communicating deficiencies in internal control to those charged with governance. The standard specifies which deficiencies are required to be communicated to the management, which deficiencies are required to be communicated to those charged with governance, which deficiencies are required to be communicated at what level of management. So what deficiencies you take to the CEO, CFO, what deficiencies you probably take to the process owner and control on those. Similarly, the objective is to communicate appropriately the deficiencies identified by the auditor and reach a logical conclusion, and also significant deficiencies which are in the auditor's opinion of significant importance, those are required to be communicated to those charged with governance as per this standard. So we'll look at, these standards are overlapping. I would say SA 260 is a broader standard. SA 265 just covers the internal control aspect. So we'll look at these two standards in concurrent and, over the next few slides. So I think, this standard gives 4 main questions. And, I can probably talk about this standard in just 4 points. First point is, who are those charged with governance? Second is, when to communicate to, those charged with governance. Third is, how to communicate with those charged with governance. And fourth is, what to communicate with those charged with governance. So this is essentially the entire standard. These 4 points are explained in detail in the standard. So we will, go through these in detail in the next few slides. The first question is, what is those charged with governance? Who are those charged with governance? So the standard has given a definition of the person, who can be defined as those charged with governance. The person who is overseeing the strategic decision of the entity, and obligation related to accountability of the entity, including overseeing the financial reporting process. So there are 3 main parts. 1, strategic decision direction of the entity, accountability, and the financial reporting process. The difference here is between the those charged with governance and management. Management is the person which executive responsibility for the conduct of entities operations. So it's not necessary that management is always a part of those charged with governance and vice versa. Some entities it may be true, but for most of entities we have seen that management and those charged with governance are separate structures, separate bodies by themselves. So, just to explain, those charged with governance can involve executive as well as non-executive members. So, executive means those who are involved in the management of the company, like the CEO, CFO, CEO. Non-executive would include independent directors who are not really involved in the day-to-day operations of the company, but are part of the board of directors of the company. Similarly, those charged with governance might be a separate legal structure. Like in the case of a company, a board of directors is a part of the legal structure of the entity. However, it could also be not part of a legal structure. Like example, a government entity, in which case, there is a governing body which is appointed by the government to overlook that entity. Though not necessarily it is part of the legal structure of the company. However, they could also be in charge of those charged with governance. They may be involved in managing the entity, like we earlier discussed. They could be the CEO, CFO, CEO, or they may be totally independent, like the independent directors. They may be responsible for approving the entity's financial statements. So they could be, like example, the board of directors. They are essentially finally approving the board of the financial statements of the company. So they could be, the board of directors could be part of those charged with governance. The standard also says that, those charged with governance could be a group or could be an individual. For example, for a company, those charged with governance could be board of directors or a supervisory board. For a partnership firm, it could be the partners. For a sole proprietorship, it could be the proprietors. For a trustee, a trust, or it could be, committee of management, trustees, or a council of governance. So it depends on, how the structure of the entity is. Similarly, if it's a, single owned business or a closely held family business, then the owner of the business or the management, the CEO of the business could also be those charged with governance. So it depends on entirely on the structure of the entity, how the entity is structured, what is the legal form in which the entity has structured itself. Similarly, the standard also gives an example on group audits. So where you are auditing a component or a subsidiary of a group, and those charged with governance may be the board of directors of the holding company, because eventually they are responsible for overlooking the entire operation, and maybe they have a common members between those subsidiary as well as the holding company. So the auditor needs to have a significant judgment. It's a judgment by the auditor to identify who are those charged with governance. And this is the most critical topic right now, even from a regulator's perspective. And that's why, if you see, the standard does not specify any person whom to communicate. So auditor has to decide whom to communicate as per the understanding of the governance structure and process of the entity. So the standard is silent on this entire aspect. It has given examples, but again, on case-to-case basis, those charged with governance could be different. So just moving on, a lot of time, we communicate with audit committee, especially in listed entities. When we do audit of listed entities, we say those charged with governance are audit committees. So essentially, they are nothing but a subgroup of the board of directors, because they form part of board of directors, but a portion of them, do the role of audit committee, of approval of reviewing the financial statement and examining auditor's report, etc. So they form part of the audit committee. So even the standard has acknowledged such a situation wherein the auditor has to communicate with a subgroup of those charged with governance. So what the standard says is, the auditor needs to take into consideration what are the responsibilities of the subgroups and of those charged with governance. So, for example, in case of a company, say board of directors are those charged with governance, and then we have an audit committee, which is a subgroup of those charged. So what the standard says is you examine what are the responsibilities as per the Companies Act and as per the company's company which they have assigned to audit committee, and what were the responsibilities of those charged with governance, and is the audit committee doing those responsibilities or is actually playing the role of those charged with governance. Similarly, it says, what is the matter to be communicated? So if it's depending on the nature of the item, the significance of the matter, you can decide whether to communicate it to the audit committee or you need to go and communicate with those charged with governance. So whether to communicate with a subgroup or with eventually those charged with governance. So if it's a very critical matter, a potential impact on the report, a matter which could, have regulators involved, then it would be better to directly go and communicate with those charged with governance rather than communicating with the subgroup. Or the auditor may also decide to first communicate with the subgroup and then probably take a concise version to those charged with governance. Discuss with the subgroup, take their views, and then give a final report or a small extract of that to those charged with governance. Communication also depends on the legal and regulatory requirement. So as per as per the standard or as per the local laws, with whom are you required to communicate? Like example 143.12, in the case of a fraud, the auditor needs to go and communicate to the audit committee, give them sufficient time to respond, and then decide on the next course of action. So again, what are the legal and regulatory requirements would drive communication with those charged with governance. Then also what the auditor needs to understand is whether the subgroup has authority to take action in relation to information communication. So you may just communicate some information. Say example, there is a fraud by the management, and you go to the subgroup and you inform them about a suspected or a potential fraud by the management. But does the subgroup or does the audit committee have the power or authority to take action against the management? That is what is important. If they do not have that power, then it will be better to probably communicate directly with those charged with governance who are eventually responsible for the entire audit or entire governance of the company. It also depends whom to communicate. Also depends on whether you will get the necessary information. So the subgroup audit committee may not be aware about all the strategic decisions of the company or the accountability of the entity. So it may be good to communicate, depending on the nature and what information you are seeking. You can decide whether to communicate with the subgroup or whether to communicate with those charged with governance. And also last but important point here is what is the communication between those charged with governance and the board of directors or the governance body. So for example, what is the gap between, say, if you're communicating to the audit committee and, what is the gap between your communication to the audit committee and their communication with the board of directors? So it all depends. Auditor needs to evaluate what would be a better way, what would be a faster way, depending again on the significance of the matter, on whom to communicate and when to communicate. Like Sanjeev sir was saying, the regulator, which is the NFRA, has been taking a different view on this entire topic. So what, if you see the recent inspection reports of NFRA, what they have essentially said is that what is the definition of those charged with governance? Those charged with governance have accountability for the entity, have the strategic decision making for the entity, and have an oversee on the financial reporting process. But if you see audit committee and you read the definition under 177.4 of the Companies Act, it says that the powers of the audit committee are to appoint the auditor, monitor independence and performance of the auditor, approve the financial statements or examine the financial statements and recommend them for approval to board of directors, and approval of related party transactions. So what NFRA is taking a position here is that they are saying that if you see the subgroup, which is the audit committee, their responsibilities are totally different than what responsibilities are required for those charged with governance. So the position they have taken is that communication with audit committee may not be appropriate communication with those charged with governance, and auditor still needs to go and communicate with board of directors. So this is again an emerging topic. This is a position which NFRA has taken in the few last inspection reports which have come out. However, it is again, like I mentioned earlier, it is again a very judgmental item. Auditor, what as an audit team, what we need to do is document what was the rationale in identifying those charged governance, whether they kind of satisfy the requirement of those charged governance. Like, do they have the strategic direction? I mean, do they have the authority to take the strategic direction of the entity? Do they have a oversee on the financial reporting process, and do they have a obligation related to accountability of the entity? And in some cases, this may be also true. Like, for example, if you have a board of directors, say only 4 members or 5 members of board of directors, and audit committee comprises of 3 or 4 members. So in a way, you are communicating to 80 to 90% of those members. So in a way, you are communicating to the board of directors. So again, it will all depend on with whom you are communicating and what situation you are in. But recommendation here is, documentation on file is quite important. Documentation on how those charged governance were identified. Document what were the responsibilities of those charged with governance as against those identified by standard. Are they satisfying? So if you identify audit committee, are they satisfying the requirements of those charged with governance, those responsibilities given in the standard? And also, it is important that if you are communicating to an audit committee, we can, as an auditor, we need to evaluate whether we need to communicate with the board of directors. So, example, a good practice would be to probably do a detailed presentation or a detailed report to the audit committee, but probably summary of that could be shared with the board of directors and discussed with them. So instead of, because it's already discussed with the audit committee, you would assume that the audit committee would appraise the board of directors of your observation. So your discussion with the board of directors would be probably limited to the summary of those topics or summary of those critical topics which you feel those charged governance should be aware about. So I think, again, just to reiterate, NFRA is taking a position that audit committee is not those charged governance, and auditor needs to have very stringent documentation on its file to say why a particular person was identified or a particular committee was identified as those charged governance. So this will help auditor kind of comply with these standards. Yeah. So this was on identification of who to communicate with, who are those charged with governance. Now the second question comes is on when to communicate, how to communicate. Right. So now the communication process. So this is probably very important because you don't want to communicate too early in the process wherein you have not really reached conclusions. You just identified a matter. You don't want to go to audit committee and board of directors and tell them that okay, we have identified a matter without kind of closing it from all angles and ensuring that you have seen all angles before reaching a conclusion. Similarly, you don't want to be too late in the day because that would not give the audit committee or board of directors enough time to respond to your observations. So again, the timing and the process and the form of the communication is very critical. So a good practice as per the standard would be, establish a two-way communication process. So early in the audit, you discuss with those charged with governance how you are expected to communicate with them. What purpose of communication, what form you will be communicating with them, and who will be the person from your team or from the audit team, will it be the partner who will be communicating with them, and from there end, whom should you be communicating? For example, if you're communicating with an audit committee, should it be the audit committee chair or all members of audit committee together? What will be the process, if you communicate any observations to those charged with governance? What will be the process of action taken by the by them on the observations shared by you. Similarly, if they share anything with you, what will be your plan of action to resolve any items highlighted by them? So it has to be an effective two-way communication and not just auditor communicating with them. So when you communicate an observation, you expect them to come back with their responses, their take on the entire matter, which as an auditor will help you get additional information about this topic and reach a logical conclusion. So early in the process, it's important to establish a communication process with those charged with governance. In audit committee, if you have identified those charged with governance as audit committee, it will be a good practice to regularly attend meetings of the audit committee to probably discuss matters with the audit committee chair without management will be involved. In fact, the standard says at least annually once you should meet the audit committee without management being involved. And while you may meet the audit committee once, annually without the management, you keep continuing to meet them throughout the entire audit process, continue to liaise with the audit committee on a regular basis. So this will help overall communication process. Now, question comes on what form of communication you need to do. Whether the communication should be written or oral. Now, again, it totally depends on the entity which you are auditing, and the matter which you are discussing. So I would say that communication has to be written on all key matters. But if it's a generic matter, it's not a very key matter, it's more of a query or it's more of a information seeking exercise, then it could be also oral communication. Again, depending on the nature of the entity, whether it has to be a structured presentation versus written reports. Now, here again, depending for a large listed company, you may expect that there would be written reports wherein all the matters will be appropriately documented, conclusions reached. For a small private company, it might be still a presentation which you do in a closing meeting, discuss, do minutes of the meeting, and document those minutes. That could still comply with the requirements of this standard. Like I said, third point is the nature, sensitivity, and significance of the item. So it depends on how significant the item which you are communicating. If it's a fraud, it's better to communicate. Like if it's a suspected fraud which the auditor has identified, then you would want to communicate this matter in written form rather than informing them verbally, so that there is no miscommunication on this regard. Fourth, like I mentioned earlier, it will also depend on whether management has communicated those matters. So if some matter is already communicated by the management to the auditor to those charged with governance, you may not want to communicate, or you may not want to give a written communication again on those matters. But you will still discuss this matter with those charged with governance. You will discuss with them whether the understanding that you have on that matter is the same understanding which the management gave them. Whether what is their view on the entire issue, and then accordingly reach a conclusion on the same. It will also depend on whether the matter has been satisfactorily resolved. So if say example, you communicated something orally, verbally to those charged with governance, and after say probably a quarter, you see that there is no progress on that matter, then it may be again appropriate to do a written communication, do a formal communication, so that you have that on record that you have communicated that matter to those charged with governance. So again, depends on what action those charged with governance have taken on the topic raised by you. Have they been proactive in resolving it, or has it been delayed? Next would be again, like I said, the size, operating structure, control environment, and the legal structure of the entity. So again, like I mentioned, if it's a private, you may just go with a simple verbal or a simple presentation. But if it's a large listed, you might want to do a detailed report. Again, local requirements. There are no local requirements in our country on whether it has to be verbal or written. The standard says that for listed entities, certain matters need to be communicated in written. But again, it is to the judgment of the auditor that what is the best way of communicating those matters. And also it depends on the expectations of those charged governments. If they expect you to communicate the matters in written, or do they expect you to communicate verbally? So it will again all depend on what is the arrangement, what is the expectation, and what is the communication process that you have defined with those charged governments. Like I mentioned earlier, if a matter is discussed with subgroup, you can summarize it for those charged with governance so that you're complying with the requirements of the standard. I have seen in developed economies as a good practice. Developed practices. What they do is, especially UK, US, they do a detailed report to those charged with governance, and that report set up. It's not just one annual report, but those reports are at various stages of the audit. Like one at a planning stage, communicating the entire planning matters. One at an interim stage where they communicate what is the progress of the audit. Do they need those target governance inputs on some matters, or if any critical matters need to be highlighted to those target governance so that they can be well closed before the close of the audit. And third one would be probably at the conclusion stage, where post reaching all conclusions, post having a initial conversation with the management, those target governance, they do a conclusion report. So that could be a better way of communicating, at least when you are doing a audit of a large listed company. Even in a small listed or private companies, it will be a good practice to have communication at various stages of the audit rather than just having it at the end of the audit. Just one, take here that if you are doing a written communication, it will be good to add a disclaimer in the report that this report is only for the information and use of those charged governance, and you just restrict the use of that report to any third party. And I'll tell you why this is important. A lot of times, this credit rating agencies, etc., they have conversations with those charged with governance, and they ask them questions that whether what was the kind of communication with auditor. So to ensure that your reports are not shared with third parties, because they may not be intended or written in a way that is useful for those third parties. So it is critical to have this restriction on use para in those charged governance, so that you restrict the use to only those charged governance, or probably to the management and not to the external third parties. This will help reduce any risk that the auditor carries. So we spoke about the form of the communication. Now coming to the timing of the communication, like I mentioned, the communication cannot be only at the conclusion stage when the audit has been done. The idea behind the entire communication with those charged governance is that it happens throughout the audit, and it's a effective two-way communication. So planning matters. So it again depends on the timing, depends on the matters that you want to communicate. So, for example, it's any planning matters. You want to communicate what is the scope of your audit, what are the entities that you will be auditing, what are the entities third-party auditor, like any other auditor will be auditing, which are the entities which probably will not be audited and may go as unaudited in the audit. So that this initial planning could be communicated early during the early part of the audit. As soon as you start your planning phase, you can communicate these matters to the audit committee. Similarly, if you are planning to use any automated techniques, data analytics, tech tools, then again, it will be better to communicate early in the process so that you can take support of those charged governance to seek the required information from the management. If you face any significant difficulties during the audit, then you need to communicate as soon as possible, because you don't want to wait till the end of the audit and then tell those charged with governance that, okay, I'm not able to complete my audit because so information we couldn't get. And now we either have a modification or a scope limitation in our report. So again, it depends on the significant difficulties or on the topic which you are dealing with. Audit findings can be communicated a few days prior to the closure of the audit, so that you give enough time to those charged governance to react, to absorb, and respond to the findings which you have. And accordingly, you can then conclude on the impact of those findings on your audit report. Key audit matters, again, those can be communicated probably at an interim stage when you have done a lot of your work and you have identified that which all topics are likely where you'll spend sufficient time. So you may give a preliminary view on what could be potential key audit matters. And of course, you will close it once you close the entire audit process. NOCLAR, non-compliance with laws and regulations, any frauds, that again, it's driven by the regulatory requirements. There are timings which have been defined by the regulators and within which you need to communicate with those charges governance. So we have covered that separately in the slides ahead, so I will not spend a lot of time on that right now. Like I said, adequacy of the communication process, it needs to be a two-way communication. It cannot be just one way wherein you are writing to those charged with governance with no response from there or no feedback on what your observations are and no view from them on your advice. Again, two-way, if the auditor feels that the two-way communication is not happening, so it's only the auditor raising the topics, you are not getting responses from those charged with governance, then auditor needs to take into consideration 2-3 things. One, whether they need to modify the audit report. Does it have an impact on the audit report? Second, seek legal advice. How you should kind of handle that situation. Do you need to probably communicate to the regulators your inability to do the audit in the absence of support from those charged with communication? Withdrawal you can consider because the risk that you carry, especially for listed and other companies, would be much higher, and hence all these considerations you can evaluate and take an appropriate step. Here also we have NFRA, certain observations of NFRAs on entire timing and form of communication. So, one large company for which they did the inspection, the observation that they had is that in the entire audit process, there was no documentation on file of communication with those charged with governance. There was a PPT. That PPT was also circulated as part of the agenda of the audit committee. But for some company of that size, a PPT, the NFRA felt a PPT is not a sufficient or not an appropriate way of communication with those charged with governance. In fact, they also said just because it's included in the agenda does not mean it was discussed in the audit committee, unless you have minutes on file on what was discussed, what was the view of those charged with governance, what were the topics raised by them. So all that needs to be documented and backed when you have a PPT or anything on your file. So again, NFRA raised questions on the timing of the communication. So generally, 1 day prior to the board meeting, they had an audit committee meeting, and they said that the PPT was discussed 1 day prior to the meeting. So if you go with a list of 10 observations, how do you expect the audit committee to react, respond, and resolve those observations? So again, they felt that the timing of those observations was inappropriate. It needs to be communicated much in advance to give enough time to those charged with governance to react to the topics raised by the auditor. Like I said, there was no other communication documented on file throughout the course of the audit. Like I mentioned earlier, there needs to be communication at different phases. Different matters need to be communicated at different times of the audit. Planning matters need to be communicated at the planning stage. Key audit matters or interim matters can be communicated at the interim stage, and then there are some matters which you can probably communicate at the conclusion stage. So again, NFRA came down heavily on the auditors. They had a detailed report. Auditors tried to kind of contend that they did sufficient communication with those charged with governance, but in the absence of any documentation around it, any minutes of meeting, all the responses of the auditor were not considered by NFRA. So again, recommendation here, if it's documentation is quite important. If you are doing a oral communication, you need to have minutes of discussion. Whom did you communicate with? When did you communicate with? What was the response from them? And so all that needs to be documented on a file. If possible, send a mail to them saying that these are the minutes of the meeting and get it documented so that you have that, you have a evidence of that meeting and that communication with those charged with governance. If it's a written communication, you have that document on file. You kind of, again, if it's a written document, you still need to have minutes of what was discussed in the audit committee or what was discussed in the board meeting and how it was kind of eventually concluded. So these are very critical aspects. Regulators are quite looking at it very closely. And if you see most of the audits NFRA has seen in the past couple of years, in all those audits, similar observations have come up. So something which we need to look out for. Okay, so we spoke about whom to communicate, when to communicate, how to communicate. Now coming to the probably the critical most topic is what to communicate. So the standard gives. So I've just briefly explained here what are the 10 things which as an auditor you need to communicate with those charged with governance. So first and foremost is the auditor's responsibility of the how the responsibility of the entire audit is divided within the company, the management and the and the auditor. What is the preliminary audit scope? Second would be independence. What is how the auditor is independent? What are the safeguards the auditor has implemented to ensure independence from the company? Significant findings and audit issues. Again, we'll spend some time on this topic because this is critical. Deficiencies in internal control. This is SA 265, talking about which control deficiencies you need to communicate with those charged with governance. Misstatements. Basically, if you find any errors during the course of the audit, whether corrected or uncorrected, you kind of communicate it with those charged with governance. If there is any fraud, again, we'll talk about this topic. There is a recent circular by NFRA, wherein they have taken a different interpretation of the requirements of 143.12. So we'll talk about this in detail. Related party transactions, non-compliance with laws and regulations, going concerns, and any representation which you take from it. So these are critically 10 broad things on which you need to communicate with those charged with governance. And like I mentioned, the communication needs to be at planning, interim, and conclusion stage, and not just at the end of the audit. So we'll see each of these, communication in detail and what we need to communicate to those charged with governance as part of these points. So first is on the overall auditor's responsibilities. So what the standard says is you make those charged with governance aware about what is the responsibility of the auditor, what is the responsibility of the management. So first and foremost thing could be you could provide a copy of the engagement agreement with to those charged with governance. The engagement agreement would clearly define what is the responsibility of the charges of the management in relation to the financial statement and what is the responsibility of the auditor in relation to the financial statement. So this will help those charged with governance understand your framework of the audit and not expect from you that you will be covering the entire because what you are essentially doing is you're giving a true and fair opinion, not a true and correct opinion. So it's important to communicate with those charged with governance what is the overall responsibility as per your engagement agreement. It will be good to remind those charged with governance that the FS is prepared by the management. So we are just giving an opinion on the financial statements, whether they are true and fair, but the preparation responsibility is with the management and the oversight responsibility is with those charged with governance. So it is critical to bring their attention to these points so that at the beginning of the process, like we said, it's an effective communication process. You need to put in. So this will help clearly define what are the responsibilities of the auditor, those charged with governance and management. I mean, when I say define, you kind of re-emphasize them. These are already defined by respective regulations. So again, you can remind them that the audit is conducted, like I said, to obtain a reasonable assurance and not a absolute assurance. It's a true and fair view, not a true and correct view, which you are kind of giving as part of your audit. Audit Doing audit will not kind of relieve management or those charged with governance of their responsibility. So irrespective of whether you do the audit, you complete the audit, you give a clean opinion, but still management and those charged with governance will have responsibilities in relation to the audit. And what are the auditor's responsibilities in relation to the final audit finding and conclusion? So what is their responsibility in terms of communicating those findings, how they will communicate, and how they will reach a conclusion? That you can be upfront and as part of your initial planning discussion, you can communicate those with those target forms. Again, like I mentioned, timing is important. If you identify any suspected fraud or a fraud, or non-compliance with regulations, non-compliance with matters required by law or regulation, then you need to immediately communicate those matters, even if it is at a planning stage of the audit. So this is basically overall giving a flavor to those charged columns of what are the responsibilities of the auditor and what are the responsibilities of the manager. Then comes the preliminary audit scope. So as an auditor, you can inform them about what is the planned scope and timing of your audit. So when I say planned scope, what essentially it means is, say you are auditing a large company with 10 subsidiaries. So would you be auditing all 10 subsidiaries, or which other auditors are involved in auditing those components? Are there any entities which will go unaudited? And what will be the timing? So, depending on the size and complexity of the entity, you will decide on when you will start the audit. Say for a large company, you may start for a March year-end audit, you may start it in November, December, prior to the March end. But for a small company, you might do it in the month of April, May, after the year end also. So it is critical to inform them about what is your scope and what is the timing of your audit procedure. Similarly, if you are auditing a large group, for the large entities in the group, you may start the audit earlier, but for the smaller entities, you may do it in Feb or March months. So again, it depends on the timing and the planning which you have done. What is the understanding? So you re-emphasize to those charged with governance, what is the understanding of our understanding of service requirements? So what is it that is expected by those charged with governance? You kind of discuss those out clearly with those charged with governance, and if they have any inputs on those points, you kind of incorporate them in your entire planning process of the audit. The materiality. So this is again a critical aspect. It will be good to communicate to them because, like I said, you are issuing a true and fair view and not a true and correct view. It will be good to communicate to them a materiality which they are using, which you are going to use for communicating any misstatements to them. Now you may seek their views on this materiality, whether they believe this materiality is sufficient. Do they believe for this, the size of their audit, the materiality should be lower or maybe higher. So you can discuss that out, but just remember that final decision is and final responsibilities of the auditor. So while you may seek their views, seek their viewpoints on those aspects, eventual responsibility will be of the auditor to determine what will be the materiality. Like I mentioned earlier, components covered in the scope and our approach. So that will be critical. Significant risk identified and plan to address. Now, this is a critical point. So, as part of your planning process, you identify what are the business risks, what are the inherent risks, what are the significant risks, what are the essential fraud risks. So, you communicate those risks to those charged with governance. You discuss with them that do they believe that the sector in which the company operates, are there any other risks which they see because they probably are looking at that sector more closely than you guys? So whether they believe that any other risk exists, and you kind of discuss your plan of addressing those risks. What procedures are you going to do? Again, discuss with them if they feel these procedures are sufficient. Do they want you to do some additional procedures? But like I mentioned earlier, you can seek their inputs, but the final decision is of the auditor himself. And also one point I would want to emphasize here, while we inform them about the plan to address the risk, it is essential not to impact the entire, the effectiveness of the audit process. So you may not want to disclose too much about what you are going to do, because it may not, because essentially those chartered governance may also have management person, and it should not impact the effectiveness of those procedures. So, example, you may say that you will do a random sampling rather than saying that you will select X samples from this location, Y samples from this location. So you need to be very careful in communicating your plan to them. So while you communicate your plan, you also kind of not tell them about those critical aspects which would essentially impact the effectiveness of the audit. Similarly, if any automated techniques the auditor is planning to use, any data analytics, then that can be communicated to those charged with governance at the planning stage. Again, use of experts. So again, if you're doing audits of large entities and you plan to use an expert, say example, impairment testing, now the auditor the company has appointed a external firm external valuation firm to kind of perform the entire impairment assessment. Now, do you use any experts of your own to audit the work done by the expert, or you rely on those experts? That again, you kind of discuss with the audit committee, take their views, because this will also impact the efforts that you are going to incur in the audit. So it's better to communicate those upfront. If they believe that additional efforts are required, then this can also be used towards discussing the entire fee portion. Then the approach to testing of internal controls. Now in India, most of the companies are covered under ICFR, so there anyways we do test the internal controls, but there are still companies which are exempt. There you can discuss with them whether you plan to rely on a control strategy, or you plan to do a substantive strategy wherein you kind of do a substantive testing of the sample instead of performing any controlled testing. And like I mentioned earlier, your preliminary views on key audit matters or critical audit matters. So this would essentially be your scope of your communication with those charged with governance at a preliminary audit stage. And at the same time, you need to understand from those charged with governance, like I mentioned, if there are any business or climate risks which you need to be aware about, any sector specific risks which you should be taking into consideration, any item which they believe needs more audit attention, like example, payroll cost. Now they would be probably aware of certain matters which as auditors we may not be aware, and they would feel that we need to pay more attention to these areas. So again, those expectations can be discussed right up front at the front of the audit. So this is essentially what we need to communicate at the preliminary stage, the responsibilities as well as the audit scope. Moving on to the independence. Now this is a very critical aspect nowadays. NFRA is again looking at these aspects very closely. So what are the matters to be communicated? Basically, it will again depend on situation to situation, but essentially there are 4 or 5 principles which you need to consider, communicate. One, are there any self-interest threats? Self-interest would be, you're performing a non-audit service as well as an audit service. This would probably have a self-interest, a threat to your interest as an auditor. Self-review threat. So are you auditing something which you only have prepared? Like many times you prepare the financial statements and then you audit. So that's a self-review threat. Advocacy threat. Are you giving any advice to the clients basis which the company is taking a position in the financial statement? Again, something which is not required and a threat to the independence of the auditor. Familiarity threat. Are you auditing the company for last 10 years? Do you know the CFO, CEO very well? Are you close buddies with them? Again, these are the sort of risks which you may want to communicate. and any intimidation threat, any, is the client forcing you to accept a position which probably you are not okay with. So these are the kind of matters which you need to communicate. Any matters essentially covering in these domain of 4 or 5 points would be kind of communicated with those chartered governance. And then, as auditor, what are the safeguards you have created to mitigate these threats? So there would be safeguards which are probably as per profession, as per regulation. Example, certain audit services or certain non-audit services, the auditor cannot render, right? Like bookkeeping services, internal audit services. These are safeguards by regulation. What are the safeguards by company? So company may have its own practice of, generally, like I have seen some large companies say that they will not give any non-audit service to any firm which is a network firm or of the auditor. So again, that's the safeguard which the company has of its own. And what is the internal system of the firm or the auditor which helps them mitigate these threats? So, like example, the auditor may have internal policies, internal department who kind of vet from an independence perspective any non-audit service which is supposed to be rendered by the auditor, and only if those services are cleared by that department, then only they can render. Similarly, now before rendering any service, you need to take an audit committee approval. So that is again checked by the regulation or by the company. That audit committee as an independent is independently vetting whether the service would create any threat to the independence of the audit. For listed entities, auditors shall communicate with those charged with governance. They need to confirm the independence of their firm, their network firms, the employees who are working in that firm. They need to disclose any relationship or any other matters between the firm, network firm, and the entity. So if there are any non-audit services, those need to be clearly defined. If there are any business services, you are taking some business service of, say you are doing an audit of a bank, but you also have an account in that bank. So again, those kind of business services need to be disclosed. And what are the safeguards applied to eliminate threats? So like I said, you may have two different teams doing two different, so one team doing the non-audit service, one doing the audit, and there is a Chinese wall between the two. So there could be, depending on the size of the firm, there could be different levels of safeguards which you can implement to ensure that independence is not impaired. Again, I have tried to capture, some of the NFRA observations. So in in inspection report of one of the entities, NFRA has said that there was a self-interest threat right at the time of acceptance of the audit. So initially, when the auditor got appointed, at that time itself there was a self-interest threat, and accordingly, the appointment was in itself invalid. So, example, if I correctly remember, the situation was that the auditor was rendering certain non-audit services prior to getting appointed as the auditor, and the period of the non-audit service overlapped the period of the audit, while the audit actually started post the non-audit services, but the non-audit services were rendered during the period of the audit. I mean, say if the audit period is 1st April to 31st March, while you start the audit in October, the non-audit services were say probably till May. So again, as per the NFRA, they have come down heavily on such forms. They have said that any non-audit service fees in excess of audit fees is impairing the appointment of the auditor, and the appointment is illegal. Similarly, if any, like I mentioned, if any service is started before the audit engagement and non-audit service is being rendered before the audit engagement, it needs to be ensured that it is closed prior to the audit engagement period. And again, here it is important to have clear communication with those charged with governance on what are the matters, take their concurrence on them, so that at least you are being open, you are being clear about what are the non-audit services you are rendering, and taking concurrence from those charged with governance before kind of taking up the audit. Again, from an independence perspective, one critical aspect to be kind of discloses the audit fees. So the auditor needs to disclose what are the audit fees paid to the firm by the company. Uh, are those fees at a very high level, which may be a threat to the independence of the auditor? Are those at an acceptable level? If no, then what are the steps the auditor is taking to bring it down to an acceptable level? Similarly, non-audit fees. What are the non-audit fees charged by the company to paid by the company to the auditor or its any of its network firms? Again, impact of those non-audit fees on the audit and the independence of the auditor. And third is the fees paid to any affiliate firms. So if any component is paying any fees to an affiliate, those also need to be kind of disclosed by the auditor. And all this, generally it will be good to kind of summarize this in by the nature of services provided, so that those charging governments can evaluate whether those services which you have rendered are impairing or is a threat to the independence of the auditor. And generally, what happens is if you in the annual report, the company also needs to disclose what are the audit fees, what are the fees paid to the auditor, whether it is non-audit or audit services. And this communication can also be used to corroborate or to match with what details the company has given in the annual report. So this could be one of the basis for disclosure. While NFR has taken a view that because the fees are higher, it is impacting the auditor's independence. SEBI, as per SEBI circular and as per ICA guidelines, you can have fees up to 3 times of the non-audit fees, up to 3 times of the overall audit fees. So again, there is a conflict over here wherein NFR has taken a position different from the acceptable practice which has been followed in the past few years. Okay, moving on now, coming to the critical aspect, what are the significant findings and issues? So what I have tried to do is divide this significant findings and issues in 3-4 different parts. First is the qualitative aspects of the entity's accounting policies. So what the auditor, while communicating with those charged governments, needs to also comment on the quality of, the accounting principles used by the company, the estimates used by the company. Eventually, you might be comfortable, but how were those estimates derived? Whether they were appropriate, whether the company has appropriate process in place to derive those, accounting estimates. So first is on the significant accounting policies, effect of the timing and method of adoption of a change in accounting policy on current and future earnings. So if there is any change in the accounting policy, how does it impact the company's current earnings as well as any future earnings? Similarly, if there are any new standards which have been kind of pronounced, so when auditor could have a discussion with those charging bodies on the timing of adoption of the standards. So while some standards are mandatory from a particular date, early adoption is allowed. So again, a discussion on the timing of change in the standards and when a standard can be adopted can be discussed. Appropriateness of the accounting policies for a particular circumstances of the entity. So you may have situations wherein the standard allows you to take a particular adopt a particular accounting policy, but it may not be the most appropriate one. The auditor, the client may have a choice between 2 policies, and they might have gone with an aggressive position. So again, there the auditor can discuss those items with those charged governments. Similarly, if there are any alternative policies, they can again discuss with the manager. Like for example, if I have an example in mind, it could be on the government grants. So there is an option to, suppose if a government grant is given in relation to a fixed asset. So there is an option to either capitalize those value as part of fixed asset and then amortize it over a period of the grant, or as and when the grant is actually received, you kind of reverse the liability or on day one itself you don't record it in the financial statement. So you do it either on a net basis or a gross basis. So depending on whether the auditor feels that whether the company will be able to meet the obligation. So because you recognize government grant as soon as it is reasonably certain, but there might be still some uncertainty, and then accordingly auditor can take a call. May have a view that whether to kind of have it on a gross basis or on a net basis to have an appropriate disclosure to the users of the financial statement. Similarly, there are various emerging areas wherein there is no clear communication or guidance. Say, for example, carbon offset. So there again, what is the position taken by the company? Is it in line with what is being done by the industry? So these point of views can be communicated by the auditor to those charged with governance. Accounting estimate quickly, whether specialized skill and knowledge the management has to kind of calculate that accounting estimate. Is there a difference between the estimate calculated by the company and those calculated by the auditor? Is there any management bias in selection of the accounting estimate? Is the assumptions used for deriving the accounting estimate in line with what is being followed in the past? Like for example, say impairment assessment. So there the company needs to kind of assume what are the future cash flows. Now, in the past 2-3 years, we have seen that the company has assumed that the future cash flows will probably increase by 3-4% every year. Now suddenly they have increased it by 10%. So does that seem logical to, was there a process followed by the company in deriving this? Why this sudden change? Why this, whether it is consistent with the earlier practice followed by the company, whether the method used to deriving 3 or 4% is this the same method used to derive 10%? So this could be, examples of what the communication regarding accounting estimate. And most important would be what is the impact of these accounting estimates on the financial statement. So whether the auditor believes the presentation and disclosure of the estimate is appropriately done, and whether the reasonable of uncertainty, because you need to also disclose the estimation uncertainty, whether that is also appropriately done. So these are the two aspects which probably as an auditor you will communicate with those charged with governance. Again, probably towards the closure of the audit once you perform your entire audit procedures. Moving on, if the auditor identifies any significant unusual transactions, transactions which are not in the normal course of audit, a sudden gain on sale of some land, or so that again the auditor may want to discuss with those charged with governance, understand from them whether what understanding the auditor has from the management, is it the same understanding that those charged with governance have? The rationale behind these policies, rationale behind that particular transaction, and the extent of which the financial statement is affected because of that transaction. So is it impacting just one line item of the financial statement, or because of that it's impacting the entire financial statement? Is it material enough to be disclosed separately as an exceptional item? So all those kind of conversations the auditor can have as part of the qualitative aspects of the entity's accounting. Quickly on the FSCP, which is the financial statement disclosure, how is the company's process? Are there any audit adjustments? Whether the disclosures given in relation to going concern, revenue, etc. are appropriate. So again, these depend on audit to audit, and accordingly they can communicate with those charged documents. Insights, I think few points which auditor can give as an insight to those charged governance. Whether they have identified any segregation of duty issues, how good are the company's IT systems, how many journal entries were passed, whether manual entries were passed at unusual time. So those will be the kind of inputs the auditor may want to give to those charged governance as part of the evaluation of the qualitative aspects of the entity's accounting policies. So again, Again, some items where regulators have observations, diminution in value of investment, again, not discussed with those target governance, proper rationale not given why, and those charges governance inputs not taken while doing accounting for this and auditing by the auditor. Then certain provisioning not done appropriately, again, not communicated with those charges governance. Or the components which are mentioned in the audit report. So in the audit report, if you are when you are doing audit of the CFS, you also give a list of components which are audited and which are included in the CFS. So those were not matching with the disclosure which is given in annual report. So again, these are items because auditor is also giving an opinion on other information as part of its review of annual report. So again, these were the highlight observations by NFRA during its inspection. Certain ratios which the company needed to maintain, those were not maintained. So all these points are not discussed by the auditor with those chartered accountants. And accordingly, NFRA believed that the entire audit process was not appropriate and not sufficient to obtain a reasonable opinion. Then second, as part of the significant findings and issues, significant difficulties encountered during the audit. So auditor may want to communicate to those target government whatever difficulties they face. See if there is a significant delay in receipt of information or very small time given by the company. Say, you have a board meeting on 20th and you get the data only on say 10th. So you hardly have 10 days to complete the audit. So those are the matters you may want to discuss with the audit committee. Some information, critical information, which is not available with them. Data is not maintained in the appropriate form, or any restriction used on the auditor that this information you cannot go there, or this information is not available. You cannot speak to a particular person. So again, these are the topics which the auditor may want to discuss as part of its significant findings with those chartered governments. Key audit matters critical uh, as as soon as the auditor believes that he has made a judgment on the key audit matters and which will be included in audit report. The auditor should communicate those with those chartered governments, take their views, document what are the procedures they are performing on into key auditors and are they sufficient from both auditors as well as those charged with governance point of view. If you identify any cyber breaches, nowadays there are a lot of cases where we are seeing that the cyber issues happening. And you may have seen a lot of listed companies also disclosing those to the stock exchanges in the financial statement. So if any cyber breaches happen and which auditor comes is aware of, he needs to immediately communicate those with those charged governments. Climate related matter, if climate related risk, nowadays, especially all the polluting industry, metal and mining industries, if you see, they have certain targets which they have given oil and gas industries, wherein they are saying that they will achieve carbon neutrality. Now, impact of those matters on the audit, on the accounting positions, so those can again be discussed by the company or by the auditor with those charges. And of course, the most important is any item which is having an impact on the audit of the launch. And so here it is critical to note that all these matters need to be communicated to those charged with government as soon as they are identified, so that you give enough time to those charged with governance to kind of reach a conclusion and get their views on it. And when I say it's identified, I mean when it's identified and the auditor has reached the conclusion that yes, these matters could have a potential impact on my audit opinion, or these will be included in key audit opinion, key audit matters, or there is a cyber breach. So if these are concluded by the auditor, as soon as it is concluded, it needs to be communicated with those. Okay, moving on, I think a few examples I put here. What could be disagreements with management which are again required to be communicated to those charged with governance as part of significant funding and issues. Now, disagreements generally would be with the top level management, the CEO, CFO, CEO, if it's with a lower level management, it's not generally a disagreement. You won't want to communicate it to those charged with governance. And again, the matter needs to be of a significant importance so that you can communicate it with those charged with governance. Like a simple policy not having a significant impact. If you have a disagreement with those charged with governance, with the management, you will go and kind of communicate it with those charged with governance. So that is something which the author needs to kind of take into consideration. And generally, disagreements, again, initial disagreements are not disagreements unless they are concluded. You have received the preliminary information and you have concluded and still management is not accepting that view, then it's a disagreement which you communicate. But some matters which are initial disagreement but eventually resolved may not be communicated to those charging governments. And disagreements could be over accounting principles, estimates to be used, like I mentioned, the growth rate for any cash flow projections, the disclosures to be included in the audit, in the financial statements, what will be the scope of the audit, whether, like example, as per the standards, you are also required to overlook the work done by the external auditors or the other auditors involved in the audit. So the management may not want you to get involved in the other audits and may want you to focus on the entity which you are auditing. So again, these could be disagreements which you may want to communicate with those charged governance. I've just given few examples here, like disagreement could be relating to measurement, which could be provisioning for trade receivables, inventory, etc. Appropriateness of any accounting policy. So, for example, if there is any acquisition accounting and there are certain intangible assets which you as an auditor believe should be identified and recorded as part of the acquisition accounting as per Ind AS 103 and which is not done, then again you may have a disagreement in those parts. A disclosure relating to a material event. So there is a subsequent event which has a material impact, but the company doesn't want to disclose it. So you may have a disagreement saying that no, this is, although it's not impacting immediately the financial statement, it's a subsequent event of such importance that this needs to be disclosed in the financial statements. So any limitations imposed by the management, again, this can be discussed. Those traffic problems. So this is now communication of deficiencies. So we covered the significant issues part. Now we go to the deficiencies. This is essentially SA 265. A quick refresher. What is a deficiency? What is the difference between a deficiency, significant deficiency, and a material interest? Significant deficiencies are such which may not be able to prevent or detect misstatements on a timely basis. Significant deficiencies are such that in the opinion of auditors require attention of those charged with governance and which have a reasonable chance of resulting in a misstatement in the financial statements. And material weakness are such that could, there is a reasonable chance that there could be a material misstatement in the financial statement. So the difference is, one, deficiency is just a misstatement. It does not result in a misstatement of the entire financial statement, but a misstatement of probably a small caption or small area. Significant deficiency could be a misstatement in the financial statement, and material weakness is a material misstatement in the financial statement. So from a ICFR perspective or internal audit of internal controls perspective, any material weakness, if you are opining on the internal control, could result in a qualification. Significant deficiencies are those which you communicate with those charged with governance, and deficiencies are those again with which you can communicate with the appropriate levels of management. So your SA 265 has kind of outlined the procedure on how you should communicate these deficiencies. First, how we should communicate these deficiencies to the management. So if it's a significant deficiency, you can communicate it to the CEO, CFO, or to a higher level management. But it's a control deficiency, you may not, again, depending on the area in which that deficiency is there. For example, if it's a fraud related area and there is a control deficiency, you may want to still communicate it to CEO, CFO. But if it's a routine area, you may communicate it to the process owner. Then again, factors to be considered is whether those deficiencies are remediated or unremediated. So you identify a deficiency and interim stage, but they got remediated by the end of the year. So again, you may not want to go and communicate those to the higher level of client. One thing important here is a combination of deficiencies can result in a significant deficiency. So the auditor needs to be very careful while evaluating the deficiency and see its pervasiveness to the financial statement. So if, for example, there are four deficiencies in trade payables. So four deficiencies together might be result in a significant deficiency or a material weakness of the overall control process. Again, some regulatory observations over here. Regulators and APRA has observed that there was no communication in certain audits, there was no communication and discussion with management on internal controls, especially on fraud risk areas like revenue also. There was no communication, no documentation around it in the file. The audit team said that they communicated improvement areas to the company and to those charged governance, but again, those were not documented in the file. So again, these were again significant findings. NAFRA, they assess that in the absence of any documentation and only a PPT, this cannot be considered to be an appropriate communication, and it was a significant finding on the audit by. Again, quickly, so we discussed about communication with management, now communication with those charged with governance. So as per standard, you are required to only communicate significant deficiencies with those charged with governance. You don't need to communicate deficiencies, and material weakness anyways gets communicated because they form part of those auditor's report. So, and when is the required communication? It should be few days or some time before closure of the audit, so that again, like I mentioned earlier, the audit committee has time to give their views, and which you can incorporate in concluding on the topic. Communication of quickly misstatements. So auditor is required to communicate both corrected as well as uncorrected misstatements. If you're communicating uncorrected misstatements, you ask them to rectify those mistakes. If you're communicating with management, you understand reasons why management believes it's not uncorrected misstatements or why they do not want to take that adjustment. Accordingly, you summarize and then you communicate with those target governance. You tell them that these were the misstatements, although below the threshold which we had communicated to you earlier. But these were the misstatements which we found, and overall it does not impact our audit opinion, but we will be taking it as part of our representation notice. Similarly, corrected misstatements, just to give a flavor to those target governance on the entire financial statement close process of the company, it will be good to communicate any corrected misstatements, which will help or those target governance also form a view on the overall FSCP process of the company. Again, if you see that when you identify uncorrected misstatements in the management, so probably some qualitative aspects of the entire process can be discussed with those charged with governance. Example, if you observe that only positive impacting adjustments are being recorded by the management, but if you identify any statement which has a negative impact on the profit and those are not being recorded, then again some qualitative flavor can be discussed with those charged with governance. Okay, coming to fraud. So you need to communicate fraud at the appropriate level of management on a timely basis as soon as it is identified. You need to communicate it with those charged with governance, unless you believe that it's against the law or it will impact the entire observation that you have. Example, you have an observation on the key management key managerial person who is also part of those charged with governance. So there you may want to see how you want to communicate that fraud. You may just want to probably communicate it with a subgroup of the entire those charged with governance. Then other matters which we need to communicate with those charge owners is the concerns about management's process of identity, and so how the management identifies, is that process appropriate? Is there a whistleblower mechanism in place? For the size of the company, are the number of whistleblowing cases which are coming, are those appropriate? Like for example, it's a very large company, but if you are getting only one or two whistleblowing cases, then it may also indicate either the company has no issues at all, or it may indicate that the whistleblowing mechanism is not operating appropriately, and hence the level of cases are very less. So you can also compare with what you see in other industries of similar size and the quantum of observations or quantum of whistleblower cases which you get. If you have identified any significant deficiencies related, especially in relation to fraud areas, there again you can, and which have been still uncorrected by the management, then again those can be raised with those charges. So here I think in fraud, I just wanted to make one again point. So there is a new circular by NFRA. So just to give you a background, 143(12) of Companies Act requires the auditor, if during the course of its duties, the auditor identifies any fraud or suspected fraud, then the auditor has an obligation to communicate, those such suspected fraud to those charges governance, and within those charges governance, and eventually to the government, central government, if the amount is material above 1 crore. Now, NFRA has come out with a circular on 26 June 2023, wherein it has interpreted the section to say that whether auditor is the first one to identify the fraud, or even if the fraud is identified by the company, the auditor has an obligation to communicate those frauds to central government. So this again is a topic which has been discussed, debated extensively across various forums. So as part of the process, if the company identifies any fraud through the whistleblowing mechanism, then the question comes up: why does auditor need to communicate it to central government? Why can't the government, if the government wants, they can ask the company to communicate, and auditor can just be an observer. This entire focus on auditor to communicate this, all these frauds to central government is being challenged at various levels. So just to give you the process, and also, the overall threshold of 1 crore is quite low. If you see large companies, they would definitely have small frauds of 1 crore, which might be immaterial to them. In fact, as per SEBI circular, they have defined now the recent amendment which came in June. They have defined materiality, and what is materiality as per them is 2% of the revenues, or 2% of net worth, or 5% of average profit of last 3 years. So and that number could be much higher than 1 crore. But again, because and as per SEBI circular, only those matters above that threshold needs to be communicated to the stock exchanges. But here, what the NFRA is asking is that if even for a company which is, say, probably the size of 1 lakh crore plus, if you identify 1 crore fraud, that needs to be communicated by auditor to those charges or to the central government. So again, there is a process which is defined. Within 2 days of identifying the fraud, or when the auditor believes that the fraud has been committed, or is suspected to have that there is a suspected fraud which has happened, auditor needs to communicate in writing to board of directors and audit committee. Then the board of directors and audit committee have around 45 days to investigate the entire matter and communicate their response to the auditor. Then within 15 days of such communication, the auditor, along with his communication to audit committee and the response of the audit committee, both need to be submitted to central government in Form AGT form. So this is again a topic which is to be looked out for and see how it evolves, because I feel this is a additional onerous responsibility on the auditor to disclose frauds, even which are identified by the company as such, or the management as such. Quickly, other matters which can be communicated are external confirmation. So if auditor is unable to obtain external confirmations, a lot of time what happens is, the company might say, don't send the confirmation to XYZ party. because I don't want to tell them that what is the balance. I'm asking from them. Probably I'm asking a higher balance, or what is the balance payable to them. So I'm disputing that while I've recorded it as a payable in my books. I don't want to kind of pay that balance to them. So I'm disputing it with them. So don't send a confirmation to them with the number. So again, if such refusal is there, then we assess if we are able to do any sufficient alternative procedures and impact of such external confirmations on the audit. If we are in the absence of such external, we'll be able to gain appropriate audit evidence to have a comfort on the audit. So that is one matter which the standard requires communication. Related party, any transactions which you believe are not authorized with the related party, any arm's length issues, you believe that rates used are not appropriate. While audit committee has approved those rates, you may have a different point of view on those items. So again, these are items which can be discussed with the audit committee. Non-compliance with laws, if you identify any non-compliance, you communicate those non-compliance immediately with those target bodies. And last is the representation from management. Now, this is very critical and not many of us do it. So what the standard says is that those charged with governance should be aware that which are the points as an auditor you are relying on representation from the management. So it will be good to send a copy of the representation letter to those charged with governance so that they can read through and they can understand that what are the points which management has represented to us on which we are relying on. Last aspect is the entire documentation piece. I think this is the most critical. First, identify, and I mean, this is a repeat of what we already discussed, but just to re-emphasize, we need to document how we have identified those charged with governance and how they kind of suffice the requirements or responsibilities. Do they have the responsibilities as defined in the standard? If we are doing oral communication, document minutes, detailed minutes. If possible, send those minutes on email to those parties for their confirmation. If it's a written confirmation, document the final version in the file. Document minutes of discussions on such written confirmation. And again, include other relevant documents like final report, observations, oral observations, which we kind of communicated, any suspected cases of non-compliance with laws and regulations. So all those items need to be forming part of the auditor's documentation in relation to communication with those charged governance. So just to summarize here, like these are, I'm just summarizing what we discussed here at the last slide now. Document identification of those charged with governance, meeting minutes to be documented on file. If there are any modifications to documentation, we document the reasons for such modifications so that you are appropriate audit trail. Evidence of two-way communication with those charged with governance needs to be documented. It cannot be only one-way communication. Communicating to appropriate groups. So if you're communicating with a subgroup of those charged with governance, you document what are the reasons why you have believe that communication with subgroup is appropriate, and do you require to communicate with those charged with governance. Key principles: when to communicate, what to communicate, how to communicate. Communication of fraud, independence, RPT, all those significant fraud, like I said, NFRA circular, which requires any fraud above 1 crore, even though identified by the company or management, to be communicated by auditor to central government, and significant deficiencies to be communicated by the auditor to those charged. So I think these are the key takeaways. Just one last point. I'm at the end of my presentation. Just one last point. The institute has come out with a checklist on standards of auditing. That is a very comprehensive checklist. It lists down all the documentation which you need to do against each standard, and that can be used as part of SA 260 to document, few references to the respective work papers and ensure that you are compliant with the industry.
Thank you so much, sir, for such a detailed and very, very informative deliberation. You have covered both these standards, SA 260 revised as well as 265. And we have received certain questions, and we are having with us Honorable Chairman of Bhiwani Pran, Dinesh ji. Dinesh ji, I have forwarded the questions to you, and may I request you to please initiate for the question answer session.
Thank you, CA Puskar ji, for the wonderful deliberation on the SA 260 and 265. Sir, there are some questions. First is kindly brief who are involved in those charged with governance. Give brief about this.
So, like I mentioned, those charged with governance are, I mean, the standard is not clear. Standard has not defined those charged with governance. What they have said are three things. One, what are the those charged with governance are persons responsible for strategic direction of the entity, are responsible for accountability of the entity, and are responsible for overseeing the financial reporting process. So anyone who kind of complies with these three responsibilities would be covered under those charged with governance. So, example, if you are doing an audit of a company, it could be board of directors. These are the responsibilities that the board kind of holds. If it's a partnership firm, it will be probably the partners of the company. If it's a sole proprietorship, it could be the proprietors. If it's a trust, it could be the trustees of the company. So it again depends. If it's a government company, it could be the governing body which has been appointed by the government to oversee the operations of the company. So again, it depends on case to case. It's a judgment call, and that's why it is critical to document how the data is identified those charges.
Next is, sir, what to communicate and what not to those charged with governance.
So what to communicate, I think we discussed, I think. Sorry?
What not to communicate, Valim?
What not to communicate? What not to communicate?
Significant.
Yeah, something which is not significant, which, which probably you believe does not require warrant or attention of those charges from insignificant matters can be ignored unless they are required by law to be communicated.
Is CEO or CWO is also the those charged with governance?
So, for example, if we said for a company, a board of directors is those charged with governance. Now, if the CEO is on the board of directors of the company, then in a way he's those charged with governance, right? He's responsible. So it again depends. If your board is completely independent board, does not have CEO on the board of the company, they are like special invitees but not full-time members, then they will not be those charged with governance. But if they are on the board, then they will be.
And sir, difference between those charged with governance and the management?
So again, this I covered. I will just repeat this. So management basically are people who are responsible for the conduct of entities' operations. So they need to ensure that the operations of the entity are conducted within the framework given by those charged with governance. And those charged with governance are people who set the framework. So who set the strategic decision direction of the company, who are accountable for the entity, and who have and oversee who oversee the entire financial statement process, reporting process. So these are the stark differences. So the board of directors would probably be those charged with governance. Say CFO or CEO, if he's not on the board, then he would be a management. And he will be a management. So even if he's on the board, he will still be a management in his capacity as CEO, CFO. And he may also play a capacity of those charges.
Sir, when we found the some matter, but the law prohibit to share the information with those charged with governance.
Yes, then you don't, right? Because if the law requires you to not communicate, say if there is any regulatory inspection, and the regulators have approached you, asking you certain questions, and as per the legal requirements, you are not required to disclose this such regulatory inquiry with those charges governance, then you won't do. I mean, you'll have to follow the law of the land first.
Any specific aspect for doing internal audit for communication with those charged with governance?
I don't think the standard covers internal audit. This will be applicable for financial statement audit, which covers those charges, governance, or historical information, as well as any special purpose audit. So, but I think the principles given in the standard can be definitely applied to any other audit, wherein they are. I mean, of course, the scope will be different, but again, similar, uh, mandate can be used while communicating with those target governance as part of internal audits.
Question over, sir.
Great.
Thank you so much, sir. At this end, now we have come to an end. And on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I extend my heartiest thanks towards you for sparing your valuable time. And apart from having the busy schedule, audit committee meetings, so many meetings lined up, but you have given your kind consent to deliberate on this topic, very important topic. So thank you so much, sir, once again on behalf of WSB of ICI for this wonderful deliberation and covering both these standards. I also extend heartiest thanks towards the Bhiwani branch of NIRC of ICI for hosting this webinar, as well as Honorable Chairman of Bhiwani branch, Sri Dinesh Chauhanji, for moderating this webinar and spending his valuable time, complete 2 hours with us and moderating this webinar. On behalf of WSB, thank you so much, Dinesh sir, for your precious time. Thank you so much, Pushkar sir. Thank you so much. And I also extend warm thanks to all the participants of today's webinar. Thank you so much, sir, and wishing you all very, very happy festive season and happy Dishara. Thank you, sir. Thank you. Thank you.